Good morning. Welcome to IG's early morning call. It's the 1st of November, Wednesday. Let's take a look at the headlines as you await the start of today's European session, where we're looking for small gains across the European equity markets. We're following what's happening on the foreign exchange markets ahead of the interest rate decision today from the Federal Reserve. One of the big moves is the dollar's rising above 151 yen yesterday, settling on the trading day at levels not seen since July 1990. Intraday, we have been higher than this time last year, but the closing high yesterday was an interesting seminal moment, I think, in the progress of the Japanese yen today. Earnings out. One of the headlines is seen this morning coming through from GSK, third quarter figures. It's raised its full year guidance and revenue expectations for the second time this year. These are looking good figures out from GSK. Potential gains to start today's trade for GSK stock this morning. And we're watching a big decline yesterday on the price of oil. We've got something like around about 8-week lows for Brent, US crude oil production, rising to a new monthly record in the month of August. Take a look at volatility. Appetite for risk. I think that's the message I want to impart. A couple of days ago, we disappeared below 20. We got a big, strong candle on the way down yesterday below the 200-day moving average. And we're building on that this morning down at 1842. And this indicates to me that people are looking for ways in which they can get access to these markets through risk. And indeed, you can see at the FTSE 100 today, 73.49, up on yesterday's 24-hour close, up on yesterday's cash close, looking for a stronger start. GSK, I guess, one of the stocks that could be on the upside when we see trade get underway at the top of the hour. German DAX, we've got clear air now between the intraday highs yesterday and where we are. We're up at levels not seen since the 25th of October. Gains as well across in the French markets. We've got a rise across pretty much all the European markets in today's trade. Intraday today, with the highest print we've seen since the 25th of October on the French CAC 40. So gains pretty much across the board. And this is underpinned by what we saw yesterday on Wall Street. And Wall Street generating some interest as well across the Asia-Pacific markets in the session in today's trade. Relatively strong day on the Nikkei 225, up 2.4% as at the close. The ASX 200, excuse me, the Australian benchmark up almost 0.9%. Even gains as well at the moment for the Hang Seng Stock Index, which has spent much of the morning session on the way down. We've still got about 90 minutes of the trading day left there to go today. I think when we look at the close on the Hong Kong markets, I want to show you what's happening on the Japanese markets there with that gain. The relatively small candle today is because it's turned over at midnight. So you've got to take into account the fact that Nikkei started trading late in yesterday's session, but it was a good two-day session, basically. 31,643 and gaining as we speak. We are on 24-hour markets here on the IG platform, give you an indication as to how things are moving at the moment after the close of that trading day today on the Nikkei 225. There's a whole long list of reasons as to why this stock index is up. We've got a gain of around about 6.7% at the close on Toyota, the Japanese automaker. It says it sees operating income up to 4.5 trillion yen. We are looking previously, or have been looking previously, for a 3 trillion yen figure for the full year operating income. So that 4.5 is up some 50% on what we had previously been expecting. So it's a good reason to buy into automakers in Japan, Toyota especially. It's also going to buy back up to 100 billion yen worth of its own shares. So you can see that's one of the reasons why we've seen that gain on the Japanese markets in today's trade. Let's take a look at what's been happening on Wall Street. Excuse me, as of the close last night, gains across the board. And they were fairly evenly spread as well between old economy and new economy stocks, where we saw appetite for risk ahead of today's interest rate decision from the Federal Reserve. Let's take a look at the individual trading patterns that we've got, because remember I was talking the other day about this fall down into correction mode or area for the S&P 500. Since then, 3 days of gains, taking us up very close to the 4,200 level, this black line I've got here, which are the lows we saw back on the 4th of October. The Dow Industrials have been one of the better off markets overall, apart from this drop down that we've seen here, where we saw the intraday trade. They're going back to March 2023. But since then, very strong day at the start of this week. And going into the new month, we've got gains as well for the Dow. So you can see we're up across the board. I want to quickly tune into what's been happening overnight in terms of some of the economic data. Got to talk about China. Remember, we're talking about the NBS Chinese data yesterday coming in with a contraction for PMI data. We got the Caixin data out today. The Caixin manufacturing PMI fell in October unexpectedly, index falling to 49.5. So this reflects what we saw in the NBS data. Anything below 50, just a reminder, is contraction. It came down from 50.6 in September, marking the first contraction since July, and it missed forecasts of a 50.8 reading. So that is a negative swing for the Caixin and the NBS over the last couple of days for manufacturing. But I did tune into some good news. Excuse me, I'm sorry. The nationwide house price index out this morning, unexpectedly rising in the month of October. This goes back to the point we're making overall in the last year. There's just not enough houses coming onto the market. If you look at estate agency numbers, they're just not having the new listings coming on. House prices are up by 0.9% in October. Expectations had been for a contraction of a 0.4% move month on month. This still means it's down year on year, but not quite as bad as the 4.8% consensus. I think it was 5.3% last month. Year on year, we're now down just 3.3%. So it's nothing like the sort of doomster scenario that I think that people were expecting this, where to be in this part of the cycle. But as I said, it's really all about the fact that there is no supply coming onto the market. No change expected from the US Federal Reserve. Tonight at 6 p.m. UK time, we get that interest rate decision from the US Central Bank. The target for the federal funds rate is expected to remain at between 5.25% and 5.5%. Now, the Fed hasn't raised its rates since July, but the threat of more increases has seen indices fall over the past couple of months, while Treasury yields have been hovering around 16-year highs, dating back to the early days of the financial crisis. While much of those fears have centered around how much higher rates could go and how long the Fed will keep them elevated, Powell's post-meeting news conference tonight, as well as the FOMC statement, could well move the markets. And we'll be looking at what's happening with the dollar. The dollar going into the back end of yesterday's session, relatively strong and rising again today, albeit by a small margin, but nonetheless up. And we're now in this, towards the top of this blue channel here on this Andrews pitchfork, which we've been following recently. It goes in these sort of waves. And at the moment, at least, this entire move is still a retracement in what has otherwise been a really strong move up for the US dollar since the 18th of July. So it's just a question of regrouping to work out where it's going to go. And that could all be as a result of the Federal Reserve interest rate decision later on today. Just a quick look at what this means for the euro dollar. Down for a second day, the euro down at 105.68. Now, before the Fed, we got some job data coming through from the private payrolls company, ADP, 12:15 today, UK time. We get the release of the numbers. We're looking there for 150,000 jobs after a relatively weak number in September of 89,000. Job openings are forecast to fall to 9.25 million in September from the 9.65 the previous month. This is important because obviously it gives an indication as to how the market is looking in terms of opportunity for those that are either wanting a job or wanting to move jobs. So that's the situation. Still relatively healthy, but nonetheless, it is something which is seeing something of a contraction. Also at 2 p.m. today, we get the ISM manufacturing data out for PMI data, forecast to remain at 49 in October. Anything below 50 is a contraction, which when you look at the GDP numbers the other day is an interesting sort of swing to things. But some of the manufacturing contraction is as a result of those strikes that we've seen for the UAW, United Auto Workers Union, which has hit the Detroit 3 so hard. GM, Ford, and Chrysler, which is owned by Stellantis. Now, let's take a look at some of the stocks to watch today. And I'm quite looking forward to the opening of today's trade for the stock of GlaxoSmithKline, which I think at the moment is showing potential rises. It's raised its full year profit forecast and sales for the second time this year after the company betting on the launch of Arexvy, its respiratory virus vaccine. Let's take a look at the figures that we saw out this morning from GSK. It came alongside third quarter earnings for the company. Sales up to 8.15 billion, expectations for 7.73 billion pounds. Adjusted operating profit coming in at 2.75 billion. Now, the London listed drug maker said it now expects a rise of 17 to 20% in annual adjusted earnings per share, excluding the effect of currency swings, up from 14 to 17% growth previously forecast. It also expects sales to rise by 12% to 13% in 2023, compared with its earlier expectations of between 8 and 10% growth. So whichever way you cut it, looking good, I think, at the start. 2 days of gains we've seen recently. And in fact, at the beginning of Monday's session, we were at levels not seen since the 8th of September. So is this an opportunity to buy in? If you are long on this at 14.55, which is where we're opening this morning, stock goes down underneath here, probably underneath the 200-day moving average down at 14.20. 14.55 is where we are opening there this morning. Let's stay on the charts. I wanted to update you as well on what's happening with Aston Martin Lagonda. Interesting little story. The big declines we've seen away from this blue line here, which is the IPO price at £19. We've now got through this head and shoulders pattern. That took us down there pretty much to 200-day moving average, and we've seen losses since then. The stock will open at 217.9. I quite like the look and shape of the numbers this morning. Third quarter figures in line with guidance and shows continued momentum according to the company. Year-to-date revenue is up 21%, driven by average selling price growth and strong demand according to the company. DB12 deliveries commence with an order book extending into the second quarter of 2024. Pipeline is so important for these large luxury car makers because they need the visibility in order to make sure that they can invest in the time, the raw materials, and the products needed to put everything together to get the cars on the road. So that's quite a good measurement. Third quarter gross margins reaching 37%, driven by strong mix of dynamics, according to the company. Full year guidance maintained, other than marginally updated volume outlook because of the new release, the DB12. So where do we go from here? 217.9 is where the stock will open this morning. Pardon me. Third day in a row of gains yesterday. At the moment, it's just a retracement in what is otherwise a stock market, stocks down story. But we'll see where things open at the beginning of today's trade for Aston Martin Lagonda. Now on the high street, Next has come through with a trading statement for the third year, and it's looking good for the company. Full year price sales in the third quarter between August and October were up 4% on last year, £23 million ahead of guidance, which was to be up 2%. So that's more than doubling the forecast that we had for the period. And it's also raised its full year guidance for profit before tax by a margin of £10 million to £885 million. And this, to me, adds up to a positive story. I think we should watch at the start of today's trade. Looking at the chart, from the lows we had back in October last year to the highs that we have had on the 27th of September, we're up 73%. Since then, there's been a little bit of a pullback. We're opening at 68.97. If you're long on this, stock goes underneath the candle that we saw stuck at the bottom there on Friday, around about the 67 pence level. We're opening at 68.97, £68.97 actually. The stock will open on the back of what looks like to be good figures for the third quarter trading statement. I want to show you a stock chart as well of ASOS, another company which is in the news this morning, but not necessarily for good reasons. ASOS trading under the ticker ASC, a bit like Boohoo really, and other internet companies that have been finding they're going a bit more tough recently. And you can see here, not too far away from the lows that we've seen, not since 2009, we're opening at 395.9. Revenue is down 11%. Adjusted EBITDA down 59.4% to 124 million. The company will explain all this away by saying it's moving into a new strategy. But the company also says 84% of the £1.1 billion worth of stock carried forward has been cleared so far in the year. Now, that is good news. This stock overhang has been a real problem for the company, and it's been one of the reasons why we've been bumping along the bottom here. But nonetheless, the company anticipates sales a decline of 5% to 15% in this full year, with a positive adjusted EBITDA and material cash generation driven by that stock sell-through, and they're further reducing net debt. So things aren't going to necessarily improve in the near future, but in fiscal 2025, the company said we expect a return to growth with the EBITDA margin around pre-COVID levels. You've only got to look to see where we were pre-COVID. The COVID lows were here, and the stock, obviously, as we know, like a lot of internet companies, did really well during lockdown with people buying online. Since then, there have been all the troubles for ASOS, and that's why the stock is on the way down. So things improving, but oh golly, it's slow. Now, AMD last night won on earnings, and in fact, everything looking pretty good until the company started talking about the fourth quarter. Let's take a look at the figures that we got. Weaker than expected forecasts analysts' expectations were beaten by some margin. 70 cents earnings per share. We've been looking at 68. Revenue 5.8 billion. We've been looking at 5.7. But for the fourth quarter, AMD said it expects around 6.1 billion in sales. Analysts have been looking for 6.3 to 6.4 billion. Now, AMD is one of the few chip makers capable of making the kind of high-end graphics that are needed to train and deploy artificial intelligence. Now, that market is dominated by NVIDIA, as we know. AMD said its forthcoming AI chips, the MI300A and the MI300X, if you want to know, are on track for volume production in the current quarter. This is a stock that yesterday saw some volatility. Let me just take a look at the 30-minute chart. Let's take a look. So there we saw the numbers coming out and then this move up again in the wake of the figures as people started to digest them. And we got news that, in fact, things weren't looking quite so bad. But the stock ended up 1.6% on from the close as of last night's cash session end. So we're looking for a positive start when things get underway later on for AMD. Earnings out today. Got a couple of companies worth of interest. AIG is one of them. It's an all-session stock on the IG platform. That will come out after the closing bell tonight for its third quarter figures. Avis Budget and Kraft Heinz, both on third quarter earnings as well. Let's take a look at other areas of the market. Yesterday, we saw a relatively hefty drop in the price of oil. I want to show you what's going on, first of all, with the price of Brent crude, because this is the one that's moving most. And we're at 3-week lows for that, just testing this line of support at 84.74. The stock down heavily in the last couple of days or so. That is Brent. So far as US crude is concerned, the market just in yesterday's session disappearing below down to 9-week lows and disappearing below the 76.4% retracement. So my price target is now 77.56, which are the lows back here, and that includes the 200-day moving average. Yesterday, crude oil stocks rose by 1.3 million barrels, which is negative, obviously, for the price of oil because it means there's more oil around in the market. Gasoline stocks falling, distillate stocks also on the way down. Just want to wind in one other area of the market, which we've been talking a lot about recently, the price of spot gold. Trading below the 200-day moving, the 2,000 price tag, and on its way down, 1978 at the moment, down at a 6-day low. Still just a small retracement in what is otherwise a positive moving story. Just a question of waiting to find out just what the headlines are coming through in geopolitics. That's it from me. We've got around about 12 minutes to go before the start of today's European session. Looking for gains across the board. Do watch out for GlaxoSmithKline, Aston Martin, and also we've got figures out today as well coming through from Next, or could move on the markets this morning. I'll be back at 10:30 with Charting the Market.